to the What Bitcoin Did podcast.
Hi there, how are you all? Welcome to the What Bitcoin Did podcast, where you get to hear from the best minds in Bitcoin and crypto. I'm your host, Peter McCormack, and this week I have an interview with Gabor Gurbacs, Director of Digital Asset Strategy at VanEck's MVIS. But first, I have a message from my show sponsors. And remember, I said this last week, don't just skip these. These are the people I work hard to negotiate deals with. They want you to hear their ads. And if you enjoy my podcast, you want to support the show, then listening to these is something you can do to help. So firstly, let's talk about BlockFi, my regular sponsor, my long-term sponsor of the podcast. These guys, I love you. Thank you so much. And if you haven't listened to my interview with Zach Prince, the CEO and founder, go and check it out. It's episode 51. You'll find out a lot more about the business. They do a lot more than just loans. They are working on bringing the future of banking and crypto to the world. So definitely worth checking out. But if you are interested in a loan, whether you're paying off credit card or buying a house, BlockFi helps crypto investors use their Bitcoin, Ether, and Litecoin without selling. But if you are interested in a loan, whether you're paying off credit cards or buying a house, BlockFi helps crypto investors use their Bitcoin, Ether, and Litecoin without selling. BlockFi is the leading crypto to USD lender in the US, servicing over 46 states with interest rates as low as 7.9%. If you visit blockfi.com/whatbitcoindid, you can learn more about using your crypto without having to sell it. And next up, I want to tell you about my new sponsor, Paxville. Very excited to have these guys on board. One of the biggest Bitcoin trading platforms in the world. They have the most comprehensive options for buying Bitcoin. You can use bank transfers, debit and credit cards, PayPal, Western Union. We're talking about over 300 different payment options for buying Bitcoin, which is pretty insane. Go and check it out. They are a true peer-to-peer Bitcoin marketplace. They have a full-service escrow system, and they offer 24/7 customer support. These guys are awesome. They are a proper Bitcoin company. So go and check them out. You can trade on Paxville now and enjoy 0% escrow fees on trades done with bank transfers up until the end of this year. Go to paxful.com. That's PAXFUL.com and create an account now. Okay, so on to my interview with Gabor, and quite timely, as the SEC announced yesterday that they are delaying their decision on the VanEck Solid X application until the 27th of February deadline next year. I spoke to Gabor about this last night. Note that these comments are his own opinion and may not represent that of VanEck, MVIS, and they are not financial advice. But he noted to me that this was entirely expected. Almost every ETF application has been pushed back to the end of the 240-day window, and he said there was almost 0% chance of the application being approved in December. He also stated that the end of February was an interesting time for a decision. And listen, he said America wants a Bitcoin ETF, so I think we're just going to have to see how this plays out. In the interview, we do discuss a whole bunch of things relating to ETFs. I do a bit of a ETF 101 with him, for those of you who don't really know what one is. We talk about the high bar that Bitcoin ETFs have with the SEC, why market manipulation is not unique to Bitcoin, and why the VanEck application is different from all other applications which have so far been rejected by the SEC. So listen, I hope you enjoy this interview with Gabor. Also, if you want to support the show, just head over to my website. That's www.whatbitcoindid.com. It'll only take you a couple of minutes. Click on the support section. There is a whole bunch of things you can do to help the show. They don't all cost money. Some things are just like leaving a review. So please, if you do enjoy the show, go and check that out. And I do want to thank my first Patreon top tier sponsor, Elite Crypto Consulting, your personalized trading teacher. Thank you guys for supporting the show. Okay, hope you enjoy the interview. You know, if you have any questions, you can reach out to me. Just hit me up on hello@whatbitcoindid.com and I'll get back to you. Good afternoon, Gabor. How are you?
Great, and how about you, Peter?
I'm pretty good, thanks. It's probably not afternoon where you are, right?
It's around 10 o'clock here in the New York area.
Right, well, it's 3 o'clock-ish here, and there's an important football match on after this, Liverpool playing, so we can't go on forever. But we've got a lot of important things to cover. So what I'd like to do today with you is I'd like to cover your background. I'd like to cover the background of VanEck. Do a bit of an ETF 101, because I think there's some assumed knowledge in there. I think it'd be good to just cover what ETFs and ETPs are. Talk about the VanEck ETF, and then some of Jay Clayton and the SEC's quite interesting comments. So are you okay with that as a structure?
Yeah, it's perfect structure.
And if there's anything you want to add, you just give me a shout. But I think a great thing to start with, I know you've covered this before, but I haven't heard it in full. It'd be great to know your background, how you came to your role at VanEck, and also how you discovered Bitcoin and digital assets and what they kind of mean to you and why this is all important.
Yep, sounds good. So starting from the beginning, I was born in Hungary. I just right after the Berlin Wall fell, so I'm a 1990s baby, as people may know. And so I spent the vast majority of my childhood in Hungary, and then later moved to Germany and sort of acquired my ground education in Hungary and Germany, mostly mathematics. I was always fascinated by math and kind of like seeing the world as it is, and mathematics was just sort of like one of these beautiful tools to do that. And then eventually I came to finish high school in the United States at Deerfield Academy in Massachusetts. Wanted to study in the US because it was just a more open world and, and sort of more open opportunities. So went to Williams College for my undergrad, and so I spent 4 years there studying mathematics primarily, a little bit of German and sociology. I ended up having degrees in math, German, and sociology, but most of my focus was mathematics and discrete math, graph theory, and eventually later on for a little bit at MIT, distributed systems. So during this time, during the summers and spring breaks, I looked for a project. I was sort of from a lower middle class family in Hungary, so I always needed to work. And I've been working from probably like age 13 or something over the summers. And so during Williams College, I always wanted to make during summers a little bit of money for myself. So I went to do this research position in 2012 in Budapest, at the Budapest University of Technology. And in this group, I did math research, and I had a few colleagues or group mates of mine who were really interested in distributed systems, and that's where I sort of picked up my first Bitcoin reference, and one of my group mates purchased a few Bitcoins back then, and so I was fascinated by it. We talked about Bitcoin in the context of sort of, not sound money and investment in digital gold as today, but what are some of the systems that are really hard to destroy, and what are some of the systems that are non-sovereign, and that resonated with me a lot. The reason for that is my grandparents have suffered under National Socialist, and then after that, my parents' property was confiscated under communism. So I promised to myself that I'll do something about it when the turn comes to me. And first I came to the U.S. because I thought it was a more open structure. But then down the line, when I first heard about Bitcoin, that became very interesting to me. So in 2012, while I was again just lower middle class guy working in a research group, got interested in Bitcoin and this amazing system. But Bitcoin was purchased very manually, if you will. So my group mate, when he showed me how he bought his Bitcoin, it was actually kind of ridiculous. So he sent money through Western Union to a guy in Romania, and then the Romanian dude would email his the public key to access his Bitcoin back, and a few days later would send a physical letter of it with private keys. So, Bitcoin trading in 2012 we have come far from that. We have futures trading, OTC trading, and derivatives and all kinds of stuff. But my background is like, this is how I met Bitcoin first, and this is how I got interested. And then I went back to school, and for a few years it was a dormant period for me because I just had to study a lot. My dad was actually very ill, so I was taking care of him. And in 2014, I joined VanEck's product development team as product management team. So I've been doing all kinds of work to build new products, protect investors, and make sure that the funds that we build trade properly in the markets. But yeah, so Bitcoin came about because of my grandparents' history, and unfortunately and accidentally, I ran into this group of people that were interested in Bitcoin as well in Hungary. And back around 2012, there's a lot of buzz in Hungary in Bitcoin. There's Budapest University of Technology was very experimental in these kind of new projects, and definitely there were a good number of able guys who were willing to spend time to figure out how systems work, and that's where I got into it. I didn't think at that point of time that I will have a full-time job related to Bitcoin or digital assets in general. But then again, and so I started at VanEck in 2014, and around 2 years later, I sort of made this effort full-time when the markets developed, and there were sort of opportunities to. Our CEO Jan VanEck very nice to allow me to focus on something that I have that I could pick up once again.
So VanEck have been considering Bitcoin and crypto since about 2016.
Yeah, roughly. I mean, we've been talking. There were various groups. So, like as you know, the ETF that we have is in partnership with SolidX, and SolidX is, if you guys are very interested in sort of blockchain technology, and they were early on the trading side and sort of the institutionalization side, and they helped us a lot, sort of to rekindle this relationship internally at the firm, and then we had some of our board members. Mentioned and brought up Bitcoin again, and we at VanEck tend to take things seriously. So like whenever there is when I was in the product development team, we would look at we'd get say out 100 pitches, and out of 100 pitch we would launch probably 1 or 2 projects, but we would take all of them seriously and develop them. And this was no exception.
So people come to VanEck with pitches for products that they want you guys to release.
Yeah, so that's they're often clients who prefer to who would like to access some asset classes, and VanEck has a history of sort of responding to client requests very well and building products that we asked to build. I think that's the best thing to do when someone is really, an individual, a set of individuals, a big bank or institution wants to use some products, then we would respond that need and build something intelligent around it. And we when we jump on VanEck's background, it would probably be more clear why we can do this. But this short summary is that we are a private company and have always been experimenting with new ideas and built them.
Yeah, so that would probably be good to look at the history of VanEck now, specifically kind of the skin in the game that VanEck has, because there has been so many applications for a ETF, but they all come with different strengths and weaknesses. But there's obviously a lot of strength behind the VanEck proposal because they have so much skin in the game with previous ETFs. And actually, it was something you hinted to me, and then I did a bit of research with regard to John VanEck's background as a student of Ludwig von Mises, which is really interesting because obviously it's the crossover with Austrian economics. So if you could give a bit of the background to VanEck, the kind of products they work on now, why they are such a strong contender for releasing and having an approved ETF.
Yeah, certainly. So VanEck has been built and established in 1955 by John VanEck, and John VanEck is the father of our current CEO, Jan VanEck. And VanEck family has always been a family with Dutch background and super innovative and sort of building the new things and having 10, 20, 50-year-old vision, forward vision. And in 1955, Mr. VanEck, John VanEck that is, has built the first international mutual fund in the United States. So back then, international mutual fund investing wasn't exactly mainstream, but there was demand for it. So Mr. VanEck built a vehicle that enables investors to invest into the European post-World War reconstruction. And again, ultimately, first Americans didn't understand why invest outside of the U.S. and there are risks there, but there was demand and surely there's a lot of things to rebuild and returns to participate in the post-World War reconstruction. And then, so that was in 55, and 13 years later in 68, obviously I wasn't there, but from the stories and legends that we know, Mr. VanEck has sold 80 to 90% of his business, that a successful business that he has built, and invested it in gold. And why did he do that? In the 60s, people in the 60s, there was no gold investing, really. And I think gold was around $200 million in total market capitalization. And so Mr. VanEck just, and while having 3 kids at home, he decided to go to evening school and get a PhD in economics. And he studied under Ludwig von Mises, who was at NYU at the moment, and we like to say that that's when he caught the gold bug. And then in '68, so he built the first gold equity fund in the U.S. And then After that, shortly after that, in the 70s, we know that inflation picked up, the gold standard was done away, and very quickly from $35 per ounce where gold was fixed, the price went to 400, and it's around 1,300 today. Probably more importantly, during this process, we have seen the first fund built around gold, which was, took a few years to get there, but the first fund was built, and then gold established itself over time as a safe haven asset, especially after the protection that it provided in this inflationary 70s period. And right now, again, gold sits around $7.4 trillion, and people use gold as a safe haven asset. So that was sort of the John VanEck story, and later on, his son Jan VanEck was among the first who built exchange traded funds in the United States and actually globally. ETFs are around 17 years old today, and they are $6 trillion in total assets. And the key to ETFs was kind of transparency and bringing in sort of like new data capabilities. So building hedge funds and mutual funds 2.0. And so Jan has focused on that and built one of the first funds, like a gold miners ETF and a few others.
There seems to be a very natural fit then between the ethos of Bitcoin and the ethos built into VanEck.
Yeah, definitely. I mean, it's the two things. On the gold side, we tend to look at Bitcoin as an asset that has the potential to become digital gold, and its scarcity property, its trust minimized structure, and general sort of like portability. It gives it the potential to give a significant upgrade to gold if we can clean up the markets, and we can get into that later and sort of properly financialize that, and we think that that's key to Bitcoin's adoption and consideration as a safe haven instrument. So it is definitely a natural fit for two reasons: one, the gold story, and secondarily, again, we have built sort of like these early access vehicles, and some things that we haven't talked about is we built one of the first big emerging market funds, some moat investing strategies, and country funds like Russia, Indonesia, Vietnam, which at the point when we built them were not exactly mainstream, but sure enough down the line was accepted. So yes, Bitcoin definitely fits in. I mean, it has its challenges, this parallel universe and ecosystem that operates alongside the financial system, and we're trying to kind of bridge that gap a little bit, and mostly it's through structuring, regulatory conversations, and so on. So we were excited to hopefully bring this Bitcoin ETF to market, and the pressure is on, right? Like you're the only surviving Bitcoin ETF application, and we have literally done everything that we possibly can to help regulators accept Bitcoin and integrate it to sort of allow the integration into the Bitcoin capital markets. So, what does that mean? And then we can drill down on that a little bit too. It means that so it's physical Bitcoin ETF. So that means the underlying is held as you hold, as physical as Bitcoin gets. You hold physical Bitcoin, not futures contracts or derivatives. Then the underlying is insured. There's proper custody. There's proper reporting on the net asset value of the ETF, and we also just and it's also the underlying. Some of the underlying is indexed to a subsidiary that we have in Germany, so that the pricing is institutional standard, regulated, and some of those things that people don't immediately think about when talk about ETFs. But yeah.
All right. Well, we'll break down the application soon, and it's quite funny because you say you're the only surviving application, and we'll also unwrap some of Jay Clayton's comments soon. But one thing I did find interesting amongst his comments were a lot of the media focused on the fact that his comments with regard to market manipulation he's fixing, and it would seem rather negative. But actually, I thought there was a very, very bullish statement in there. Multiple bullish statements with regards to how he considers open ledger technology is great for infrastructure, but very specifically when he was asked about the ETFs, he said, well, let's see how this evolves. I took that as a very positive statement from him. So you guys having your open application to me isn't a closed deal just because of market manipulation. But we will unwrap that. Let's firstly, just because there are going to be people who are really interested in this, but they don't know what this market is about. So an ETF is a form of ETP. So let's break down what ETPs are, ETFs are, and what the market is about, why they exist, who uses them. So if you can give kind of like a 101 on ETPs.
Certainly. So ETP stands for Exchange Traded Product, and it's a broad category. Exchange Traded means that the shares of the vehicle or the investment product is trading on an exchange like NASDAQ, NYSE, or CME, or CBOE. Why does that matter? Well, the reason is, as I mentioned earlier too, hedge funds and mutual funds do not trade on exchange, so you cannot access the share of a product intraday and buy and sell that. So ETS, and that's one point. So ETPs, there are multiple. One of them is called exchange traded funds, which is the best kind. So exchange traded funds kind of holds the underlying, generally physical. The shares are so the ETF issues the shares, and then the shares are traded, sort of like in a decentralized, trust minimized way among authorized participants, which are the largest banks and institutions kind of in the world. And so that's an ETF. An ETF has every 15 seconds it has a price, so you can sort of almost real time track its price and see where it is at. Its shares outstanding. So is also public and available. So every time that you look at an ETF, you can estimate 99+% of what the underlying is. So that's not the case with mutual funds and hedge funds who report. Mutual funds report at the end of the day. Hedge funds often report quarterly, and you have no idea where your assets are during the day or sometimes during a quarter. And obviously our clients like transparency, so ETFs give that sort of transparency. And then there are some other type of instruments like exchange traded notes, like those that we see in Switzerland or Sweden. They're issued by an entity, and they intend to track an underlying either index or asset, but the tracking is conditional on whether the institution that's backing this note will fulfill its obligation. So you're taking 100% credit risk on the on basically you trust the institution that they're going to do the right thing, whereas an ETF, you hold the underlying and you have recourse, and sort of you own the underlying assets. You have the rights to it. So ETNs were easier to launch because it's an established structure where you can put it in more esoteric assets. ETFs are a harder game, but I think ETFs are a better exposure for investors. And as far as Bitcoin goes, it stays true to the core principles of it. And there are some other exchange traded products and exchange traded commodities, and then some others that are again similar to ETNs. You're exposed to credit risks. The upshot, a few things that are important about ETNs is the intraday price transparency, the transparency to shares outstanding, the generally physical properties of an ETF, and so those are kind of the ETF characteristic. And then on the trading side, generally ETFs are favorable for two other reasons. There's extra liquidity, so there are some traders called authorized participants. Those are the large market makers of the world. They arbitrage between the net asset value of the ETF, so the end of the day 4 p.m. New York time close value, versus the price at which the shares trade on exchange during the day. And so they buy and sell to narrow that spread, and to do that, they are naturally incentivized to sort of just do that because they make money on that. So the price and the NAV are arbitraged to be closer together. So there's this extra injected liquidity and price discovery in the process that no other sort of instrument has, and that's one of the reasons why we're very excited to hopefully bring an ETF to market, is because it's going to enables sort of like more liquidity for the trading of ETFs, because large companies hold inventory to make sure that they can arbitrage the spreads, and we hopefully will not see scenarios like flash crashes on certain spot trading platforms that I can't name, but like that's the hope that when our funds trade our gold ETFs and stuff in the hundreds of millions of dollars a day and are in a multi-billion-dollar asset range. And those, we need to have proper liquidity and proper market structure for those to, basically, we want to do the same for Bitcoin, because that's kind of the level that we deal with otherwise.
And so who are the customers of an ETF? Who is it purely for funds, hedge funds and venture funds to buy?
On the van, so we have, I think it's like the 500 or some, so 460 largest institutions are our clients, the Goldman Sachs's, UBS's, Fidelity's of the world, and the big asset managers that are those that own our ETFs. But there's also family offices and brokerages for and individuals. So it's a big mix. Our Bitcoin ETF is institutionally geared first because of the regulatory obstacles that we are having primarily. And right now 90% of individuals trade on roughly on crypto trading platforms, and institutions are not meaningfully involved from a total volume kind of perspective, and so we geared first our vehicle towards institutions. So the basket size is 25 Bitcoins and things like that. So if you just do the math quickly, so if you have 25 Bitcoin basket is 5,000, say roughly 5,000 per Bitcoin for the sake of argument. That's 50K for 10, 100 for 20, and then 125 roughly for 25. So $125,000 basket. That's pretty big. And then a usual allocation, say, to Bitcoin should range somewhere between 0.5 to 1% or maybe 1.5 of net worth, if you're just thinking about it as another risk asset that you want to put in your portfolio from an allocation perspective. Say it's 1%, so you have to multiply that 125,000 by 100. So it's 1.2. You have to have like $12.5 million at roughly current price ranges. So it naturally creates the ETF naturally creates an institutional focus or larger investor focus. And again, we want to give the opportunity to institutions to participate in this new area as well. And they cannot right now. They can't trade on spot exchanges. A lot of the institutions are uncomfortable trading futures, and so hence the ETF.
Do institutions have any particular trading style? Like, do they tend to buy and hold for longer term? Is there any particular characteristics that stand out for them?
Yeah, I mean, there are a few kinds of institutions. Most of them that we deal with are kind of long-term buy and hold and not much market-making type of trading. So they're in the fund from anywhere between 1 month to 10 years, and so it's long-term. The long-term money really needs good vehicles and proper market structure to get in. It's not like, there's right now a fork and I need to jump on my XYZ account, transfer my money to Asia and claim my assets. That's not what our clients do. They want a stable vehicle that takes care of all of that for a Bitcoin. If they want to access Bitcoin, they just want a strategy that's doing the work for them. Because let's be honest, I'm trained in mathematics, done a lot of comp sci. And it's still really hard to sort of, it's time consuming. It's not really hard, it's really time consuming to manage your assets. And you need to be spending time and figuring out the latest solutions. And if people just don't have a whole day to a month to look after their gold or payments portfolio, they have a few minutes. And then so there's a lot of UI and other work that needs to get done for Bitcoin, or like investment structure and work that needs to get done for Bitcoin.
And if these are physically settled, are you, at the time an order is submitted, are you buying yourself OTC at the same time? How does that work? I don't understand how the infrastructure for something like that works.
Yeah. So the way in which an ETF, so an ETF suppose we are, tomorrow is Monday, right? So actually, no, when this podcast is going to go out, I think it's going to be Wednesday. But so pick a day, and then there's going to be trading on exchange for an ETF. Say there's $100 million worth of orders for ETF shares, which represents $100 million worth of Bitcoin. That's kind of the one-to-one physical type of settlement idea. Then the clients can get their or buyers can get their shares, market makers, that is at NAV. So at the end of the day, we need to source $100 million worth of Bitcoin. So we would reach out to work primarily via over-the-counter desks and trading desks, that is. And the trading desks would be, we have recently released an index of the three largest trading desks. That is DRW's Cumberland, Circle Trading, and Genesis, Circle Financial and Genesis Trading. And so these three desks are the largest in the US. They're broker dealers or affiliates of broker dealers, or regulated entities that our PDF could trade with. So we'd go to these desks and source the required Bitcoin. And then the ETF has right now the rules for settlement is T+2. So really you can source the assets in 2 days to satisfy sort of like creation and redemption requirements for it. The reason for OTC trading is that the entities are regulated. They can trade at size, and they are hooked into the global liquidity pools in more sophisticated ways than crypto exchanges that are unregulated right now are. Also, again, these are entities that are used to trade at size that we can trade with, and now through that index that we built, we have proper price discovery and access to the OTC market. So there's efficiencies to be gained on the pricing side as well. And actually, some people think that why is OTC trading weird? How does it work? How does it work in the regular market? So for instance, in the municipal bond market and emerging bond markets, institutions almost never trade on exchange. So their pricing is, there's an institution on the retail price, and the institutions are trade over the counter with large dealers, and that's actually the natural evolution of large basket trading for bonds and like municipal bonds that trade very infrequently, or emerging market bonds that trade in a fragmented system. It generally happens to be over the counter at size, and I think that this is what's developing for Bitcoin as well, the over the counter markets, and so we again first we had to be. So I knew that they were regulated entities, so that was useful for us versus getting price series, for instance, from a crypto exchange. And I also knew that these guys can satisfy creation large trades, so that's kind of useful. And naturally, the market is evolving towards over the counter. It's not appropriate for individuals to trade over the counter. Like the average trade is right now, I think it's somewhere between $250,000 to $500,000, and these are relatively infrequent trades, so a few hundred trades a day. But then you can see trades like $30 million or more for Bitcoin. So, but we definitely wanted to get a price series for that institutional type of trade and size trade that is liquid. And again, I guess we have not been talking about right now is sort of that our ETFs again trade in the hundreds of millions of dollars range, and then the pricing that represents that has to represent a non-academic kind of benchmark, a practical tradable benchmark. And we have about 20 guys in Germany who are through at our index subsidiary, which is called MVIS, and they are creating these practical, tradable, investable benchmarks that are not academic. It's really kind of hands-on and helps portfolio managers. And so that's our hope is that this new index, for instance, helps regulators get more comfortable because we have insight into pricing and trading in the over-the-counter markets, and we just made sort of like the case that there's also extra liquidity that we can tap into in a regulated way. So I'm kind of I'm bullish on that, and it's like it's a lot of small market structure developments that hopefully help over time.
Next up, I talked to Gabor more about the VanEck application and why he thinks the SEC should be approving it. But first, I have a message from my show sponsor, BlockFi. Okay, so let's talk about BlockFi again. And with the tax season coming, you want to make sure you got your financial affairs all in order. And if you don't want to sell your crypto, then BlockFi can help. No taxable event is triggered by taking out a BlockFi loan, and interest paid on BlockFi loans can be deducted from your taxes, reducing your tax burden. Also, BlockFi accepts Bitcoin, Ether, or Litecoin as collateral. Customers can be funded in USD or GUSD, which is Gemini's dollar-backed stablecoin, and you can go from application to funding in as little as 30 minutes. BlockFi is the leading crypto to USD lender in the US, servicing over 46 states with interest rates as low as 7.9%. Also, BlockFi is the best way to get USD funding without having to sell your crypto, and applying takes less than 2 minutes. If you head over to blockfi.com/whatbitcoindid, you can learn more about using your crypto without selling. And so the one area I don't understand is, actually there's loads I don't, but one area I don't understand is, so you will have a client who will make an order at a certain price quoted, and you said you have 2 days to settle that?
Well, so the process looks like the following. So the client makes an order. It is guaranteed for an ETF that you can create or redeem at NAV, which is the 4 p.m. price. So the client gets that price. Our goal, with the ETF is we have to match that price during the period. So
what if you can't?
Generally, there's these authorized participants that I mentioned that they have inventory, so they would buy and sell to match that price, and they have interest in. There's this. It's almost guaranteed. It's close to guaranteed that we can get there,
right.
Because again, the underlying assets. So the ETF, if there are assets that are going, we can always issue more shares from the ETF to help getting closer to the price. And I think that's just that helps matching the price number too. So you have. I think it's it's probably. I'll share a video when you publish this podcast about the authorized participant system, but really there's just an extra set of institutions making markets to get closer to the price, and they are incentivized in the process. So that would be my answer.
Okay,
without going crazy about it. Yeah.
And let's talk then a bit about the VanEck ETF. As you said, it's the only one sort of waiting a decision, but it seems to be. How do I put this? It seems to be the one that seems to be most geared to addressing the concerns of the SEC. Actually, a question before that. Where does the mandate of the SEC start and end, and the mandate of the CFTC start and end? Because there seems to be some overlaps here.
Yeah. So there's a few things. I probably should have said this earlier, but these are my personal opinions, and there are some things I can only talk about what's in the application and not more. But so let's talk with the SEC and CFTC mandate. So the CFTC has deemed, I think it was in 2015, deemed Bitcoin a commodity. That is so really the CFTC looks after commodities and futures trading related to any kind of commodity transaction. So the CFTC's mandate covers Bitcoin fully. An exchange traded fund is by definition as a security. The Securities and Exchange Commission is driving the decisions around the security. Now, there are other securities that are based on commodities like gold ETFs, oil ETFs. So the transactional part is kind of supervised by the CFTC, and the trading of the security itself, like an exchange traded fund, is supervised by the SEC. Now, for us, we need to. I think the CFTC has been more lenient and pro-innovation in the U.S. So there are 2 futures contracts that exist in the market by the CBOE and the CME. And NASDAQ announced their intention with our subsidiary as well to build sort of like a 2.0 version of those things. So the CFTC is sort of kind of pro. The SEC is trying to figure it out, like how how do we deal with these new types of assets? And I think, a few things. One, we made the argument that it would be good for everyone to allow a Bitcoin ETF, because right now all the trading is happening in this gray area, and that if the SEC does not allow an ETF, then trading will continue to go to these gray area places which they don't have jurisdiction on or cannot regulate, and thereby fail to protect investors and sort of and keep up orderly markets. So the ETF is like one tool to bring trading into a more regulated space and better protect investors. And there's a ton of work that we've done on the pricing end, like years of work on what's the right price for Bitcoin in a fragmented system, and that is representative of liquidity. And then we've done some work on surveillance, we've done some work on custody, and all these questions. So we're hoping that work is going to be viewed positively. And I think the ecosystem is maturing, and the regulators understand more and more about about Bitcoin. And it's kind of interesting. Like I think like we have there are public documents out there from our meetings, and we publicize these documents because we want to just allow the general public to learn about these arguments. A lot of commodity ETFs before, like freight futures, gold, silver, copper, have been approved without the such high level of requirements as a Bitcoin ETF.
Well, actually, it's funny you should say that, because obviously, I was with Hester Peirce at the SEC, and one of the discussions we had is kind of like chicken and egg. A number of the concerns the SEC have will be solved by allowing for an ETF.
Yeah. Yeah, so like one of them is pricing. Like ETFs have to use transparent benchmarks. That's kind of sold by definition via an ETF. Client protection, broker dealers offering securities. VanEck is regulated to offer securities, commodities, assets that you name. We're one of the first kind of issuers for ETFs. So it's that question is solved. Market manipulation via the over-the-counter markets for regulated broker dealers. We think that we solved that market manipulation question as well, because you have one, price transparency, and you have regulated entities that are under under established legal jurisdiction. So I just don't understand the argument there. We actually we think that we solved that problem. I think the bigger issue is that a number of people assert that there is market manipulation and there's gray area activity in outside U.S. jurisdiction, like Asia and all these larger platforms that may have influence on the price of Bitcoin, like in the United States, and from a different jurisdiction. And honestly, that's kind of like an unsolvable problem. But I also don't know why that's a big issue. And one example that I like to give is that my home country, Hungary, and the three countries around it, and it's called the Visegrad Group, which is kind of the more established Eastern European countries, they control about 75-80% of the Hungarian forint. Now, there are Hungarian foreign futures in the US and the UK, all other places, and everyone knows that the Hungarian central bank has an outsized influence on it. This is the same with oil in Russia and Saudi Arabia and other commodities. There are just there are some areas where there's foreign influence on every other kinds of assets. So what we have a hard time understanding sometimes, that why does Bitcoin suddenly have such high standards or double standards that I like to call versus other asset classes. There's actually today more transparency into the Bitcoin markets than commodity markets and the bond markets. So I think it's just a new asset class, and the regulators got scared. But again, they want to ensure that the markets grow healthily, and there are certain steps that we can take to help this process and help the growth. And again, with the things that we have done just in the past 1 month actually, is we have created this over-the-counter index to show transparency into over-the-counter market pricing, and we have also and has a partnership with Nasdaq, and Nasdaq is going to surveil a number of spot platforms, which is going to be good down the line because you can claim that, okay, these are regulated and surveilled entities. So if someone is doing bad things, then those traders will be caught. And actually, a number of exchanges no longer want bad traders on their platform. So I've noticed that there's a series of exchanges that are growing out from this immature, trying to break things type of thing, and want to be long-term trading businesses. So they either register as broker dealers, alternative trading systems, and put surveillance on their markets, or just will cease to exist. And that, over time, that's kind of the only viable way for in the market. So I don't know. I'm kind of positive, but I'm also kind of bummed out to be fair. Like, spent years trying to really doing a lot of work that regulators haven't been doing, and offered all these solutions that do not exist even in the equity and commodities markets. And the net result is sort of like higher standards for Bitcoin, but not higher standards for other asset classes. And ultimately, Bitcoin gets stopped and trades in this gray area. So everyone is kind of losing out. And there's this, and entrepreneurs in the crypto space, and then those who deal with Bitcoin are sort of, they have this fear that, what do I do? What if regulators come in and change the rules on me? And that's just no way to do business. I think it is disturbing, actually, because as an entrepreneur or innovator, or someone who wants to build a long-term business in any country, they should have regulatory support. I don't think that most people in Bitcoin want to be criminals or launder money and all that. And eventually, what happens is just everyone is jumping from country to country to find a home for the product that they launch, and they don't have the stability. So a crucial innovation is just being stopped.
Manipulation in market isn't unique to Bitcoin. We're always seeing examples of markets being manipulated. We have the LIBOR markets manipulation. We've had other commodity markets. So it's kind of strange, right?
Yeah, manipulation is a weird word. It's like manipulation is sort of, it feels like, capitalism, some larger players have undue influence in the markets. And so is that manipulation generally? Well, I don't know. Like, the Hunt brothers cornered the silver markets. There's manipulation in gold. The S&P 500 is manipulated today as we speak. Well, not today. The markets are closed when we record this. But what happens is, like, some people are trying to gain an edge through new electronic means in trading. Is that manipulation? Not really. And what I would stress is Bitcoin is not uniquely manipulated. I believe, like, there are, for instance, like, if you trade, I don't know, commodities are largely invisible to the world, and there is hundreds of trillions of, literally trillions, well, maybe not hundreds of trillions, but trillions of dollars of commodity derivatives over the counter traded in China. Zero visibility to it. Probably large companies amassing amounts and then, trading it with some strategic vision in mind. Is that manipulation? Should we seize the oil markets or commodities markets because these type of activities happening overseas? No. I mean, it's sort of a silly argument to single out Bitcoin. I think the right way to look at it is put proper controls on platforms and places where we have influence on, and try to build the right ecosystem and incentivize others to participate. So that's what I've been doing in the past 2 years, trying to talk with my previous exchange colleagues, friends, business partners to take a long-term vision and clean things up and show that we can do just as well, if not better, than the equities and commodities markets. And sure enough, right, like with the Nasdaq relationship, we have a few exchanges that want to have their markets surveilled. Sure enough, the over-the-counter guys said that we are going to help you with price data, because we want to legitimize Bitcoin, and we want to give a little bit more transparency to the market so we can run long-term businesses, and we're okay with higher standards. that is not true for many other markets. So like, again, like the manipulation and transparency and all those are words that are thrown around. And I think you're absolutely correct that the sort of like it is not, Bitcoin is not uniquely manipulated, and so it's just, maybe I would even claim that it's more clean than other asset classes because of the transparencies that you naturally get via the underlying Bitcoin blockchain, and as well as some of the freely available data on the markets, meaning that a lot of, in equities and commodities, you don't get free data from trading platforms. In crypto, you can get link into a WebSocket. And actually, like Pierre Richard just pointed this out yesterday, and we had a tweet series on this, that data is mostly free, and then we're providing a lot of data on the over-the-counter market. So it's like, what else can you have?
Could you argue that the US government manipulates the stock market? Because if I was once told that a stock market is a sign of a country's health, right?
Mm-hmm.
And if you're looking like you're heading into recession, or you are in recession, the government can issue bonds and manipulate the stock market, right?
Yeah. I mean, if you U.S., not only the U.S. government, every single government manipulates stock markets around the world because they print money and then buy up, shares of companies, not just on their soil but in foreign soil too, to kind of prop up their balance sheet. Is that manipulation? Apparently not, because the government does it. So, that's kind of that's disturbing, and that's a bigger problem, right? I think on the long term, like Switzerland, Japan, the United States have propped up the equity markets like crazy with their constant buying, and they print money at zero cost practically. So it's and then you're like, you think about, like, is it okay to launch a Bitcoin ETF? It's just a very different category question. Like, sure, it's.
So let's look again at the VanEck ETF. So can you update me on the current status? When the current status with the SEC, when you're expecting a possible decision, kind of like, I know you don't know an exact date, but a kind of time frame-ish, or where you feel you're at. And also, if you can explain the actual specifics of the VanEck ETF, why you think it is different from those that have been rejected, specifically with regard to custody, settling in cash, and market manipulation, how you've addressed all of those.
Yeah, definitely. So this is all kind of public information. We made an effort to pack as much as possible into our S1 registration statement, so I can share a number of things on these. So first, let's see the timeline. Timeline is what most people are interested in. First, the next decision is, I think, to the 29th of September. And again, this is public information. And the latest time when the SEC can make a yes or no decision, I think, is the 27th of February in 2019. So that's kind of our timeline. This is all coming up very fast. The specifics of the ETF is kind of the following. So it's physically based. It's not futures based. It's insured, the underlying, against theft, hacks, and losses. It is indexed to the MVBTCO index, which is the over-the-counter index that I mentioned we've built, and that's based on sort of like regulated platforms and liquid pricing. And so another kind of point in our ETS is institutionally oriented with 25 Bitcoins per basket. And in general, just this whole product tries to stay true to the core principles of Bitcoin. So, here's one financial vehicle to access this great product. and so while, how is this different from others? Well, all the futures ETFs were rejected, right? Like in mass, the Winklevoss proposal was rejected too. So futures, the differentiation from futures is clear. It holds physical Bitcoin, and that's the major thing in the insurance. The differentiation from the Winklevoss vehicle is the following. So our product is insured, and I think we have seen a number of hacks and losses in this market, and see why insurance could be very important in this market. The other point is we are working with a regulated index provider, MVIS, which is our entity and one of the first EU benchmark registered index provider. So that's there are basically rules of engagement about pricing and data. And the other part is, I think it's very important that you do not operate any exchange or anything like that in Bitcoin, and that is likely and hopefully makes regulators more comfortable on potential conflicts of interest. One of the big questions that regulators are looking at is conflicts of interest recently with crypto exchanges. Like, some crypto exchanges are basically they hold funds, they trade funds, they provide indices, sometimes investment vehicles, and trade their books, sometimes trade on their exchanges. So there's a lot of potential conflicts of interest, and by definition, an ETF can not have any of those. And that's sort of one of the big reasons why we were proponents of pushing an ETF, because again, it will just transition Bitcoin trading from this gray area to the green, and I think it will instill confidence in the market and help investors who want to get exposure to participate. They can't do it right now. Like, a lot of large bank risk teams just say, no, sorry, like, you can't trade this, and there are good reasons for it. So I'm hopeful.
The interesting thing is that the SEC keeps stating that they're open, come and talk to us. They seem to be bullish about the potential of the technology. And it feels like the VanEck proposal answers every single concern they have. So, I mean,
I think we do, but that's just Gabor's opinion, and it's just like, we actually went above and beyond answering questions that don't exist for other markets. So it's like, you're welcome, and I'm sort of I lost about an inch of hair already working through all these complexities, and it would be time to get an ETF to the market. I mean, I generally say this to publicly too, that America wants a Bitcoin ETF. It's true, and this is held up for way too long. There are worse things in the market than Bitcoin. All these leveraged derivatives, like banks being raided. I've been looking at some stat which is like fascinating to me. I think the entire world has around 60 trillion. That's kind of the total GDP of the world at year-end 2017. So it's kind of like a year and a half or 2 years old. And then the total notion of derivatives in the world is 1,500 trillion. Like, that's pretty crazy. Like, we have something like 25 times the total notional GDP of the world in derivatives, and people are worried about less than $100 billion asset class having a regulated vehicle about that. So it's like, I think there are other things to lose sleep over. The other thing to think about is there are other countries in the world so we are competing in this very highly regulated environment, and trying to, at the end of the day, we are like, my team and VanEck is Team United States in the world, and we want to keep innovation here. And we want to integrate things in the largest capital market in the world. And so we do the right things, and we want to make things successful so that investors here can be protected and successful themselves, and then and access technology. And you go to like some Asian countries and some smaller jurisdictions, and recently G8 type of jurisdictions saying that, yeah, you guys go ahead, innovate, do things, and it's really hard to compete when you don't get the regulatory support, and it's like the reasons are sometimes unknowable why, and so I think a lot about that recently too.
But you know what, I didn't expect Jay Clayton to come on stage and say, oh, actually, the VanEck ETF looks great, we're probably going to approve this. I think it's very important for them not to give out any kind of signals for something as coming before it does.
Yeah, no, I know. I'm just saying that I think some jurisdictions have been faster. So Switzerland has an ETP in the market. Sweden has, and they figured out ways to kind of mimic the structure. And they're, Singapore is open, Japan is fairly open, South Korea. There's a lot of developments that are way ahead of the United States. And I'm just concerned as I'm 28 years old right now, and the vast majority of my career is in front of me, and I want to build great things in an environment that supports me. And I think a lot of very successful people feel the same way, that if we want to stay relevant and build something in this country, then we need support. And and I think recently we have seen sort of like, build things in America type of thing. It's like, yeah, we would love to. and then unfortunately, it's just like we spend a lot of money, time, and effort building things, and the goalpost is moving on us. But yeah, again, like without saying anything specific, because I don't have any like specific information, more definitely nothing about the approval time and stuff like that. But I think market structure has developed, and there's lots to look forward to in 2019. I want to, Jan VanEck, my CEO, is actually much smarter than I am generally in business, and he likes to say that, and that was he said this in his closing keynote at Consensus, that the 2019 is going to be the year of singles, not home runs. So we'll see small wins, but eventually we'll get there, and we'll see products. So 2018 was the year of regulation, and 2019 forward will be the year of, hopefully 19 will be the year of implementation. And I think that's kind of just important to keep in mind. And we see those singles coming in, right? Like transparency into the OTC markets, surveillance in some markets. Actually, people using Lightning. I love the Lightning Network, and adoption is growing. Channels are bigger. I think it's really awesome. And then, crypto exchanges, and people generally talk negatively about them, but I just wanted to point out that they have done a lot of good things too. So it is actually harder today to get a tier 3 verification of the crypto exchange than to open up a German bank account. That's a kind of personal experience on that. And so there's AML and KYC processes. Exchanges are reporting to FinCEN, and while regulators may not understand the full process, enforcement and actually enforcement agencies really like crypto because bad people get arrested faster. And so that's kind of those changes are coming along, and I don't know. I'm excited to not think that much about financialization and regulatory headaches, and I want to think about the next thing. So if an ETF comes up, how do I leverage like the cool tech that is being built on Bitcoin to enhance financial instruments? So I kind of want to focus more on that once an ETF is approved, hopefully. I think that's much more interesting, and we can produce more value for people if we could just do what we do best.
Well, and listen, look, if this one is rejected, there will have to be some pretty clear guidance on why, and that will be the template for, I guess, the next step.
Yeah, exactly. So I mean, we're grown-ups, and again, it took us a while to build other market structure for international equities and gold funds and other sort of like harder to access asset classes. So we'll fill out the template again and again and again should it be necessary, and build this space. And we like to say that we run a $48-50 billion business beyond this, so we can stick with it. Just I just think that it should be less burdensome to get an innovative asset to market. The world is moving fast, and we need regulatory support to bring and keep newer technologies in the US.
Well, that was something Hester said to me when I was with her as well. That is her main concern, that it will push things abroad. Still, listen, I'm pretty confident. It looks like the work you've done is great. It looks like you've addressed their concerns. It does appear to be, in my limited knowledge, a very different application from the other applications. So I guess all we can say is fingers crossed. To close out, it would be good to find out how people can follow you, follow VanEck, who you want to hear from, and how people get in touch.
Yeah, definitely. I'm fairly active on Twitter, and so we have. I'm happy to we can tweet it together or something. But my handle is @Gabor Gurbacs, so my full name, and VanEck is @VanEck _US, and we have MVIS indices, which is @MVIS indices. I'll send you the links. I think we're active in social media. We have our website, and reach out for any information. We're fairly open. Basically, allow information to flow freely to the extent possible, to stay true to the spirit of Bitcoin and generally crypto. So we can let us know if any questions. Like, we learned a lot about, for instance, the indexing side. We've learned a lot about the over-the-counter markets, and it was recommended to us to work with over-the-counter markets through kind of engagement from the community. So if you have an idea, or if you want to kind of partner with us or whatever, and then we're happy to help, and we're also happy to introduce you to folks in our network to build the Bitcoin space together.
Brilliant. Well, listen, it's been great to have you on, and also just personally, thank you, because you've been a bit of a supporter of the podcast. Hasn't gone unnoticed, so thank you for that too. And I look forward to seeing you again soon. Hopefully, I'll come and see you next time I'm in New York, and we can catch up in person. Yeah,
thank you, Peter, for the work. I love the podcast, and how many followers do you You have how many downloads? 470,000 plus.
Yeah, I'm just coming. Within the next week and a half, I will cross over 500,000 downloads.
Oh wow.
Yeah, and I just did my first 100,000 for a month. It's growing fantastic, but it's only been possible because so many people have supported it, and people like yourself have agreed to come on, Pester as well, and everyone from the very start. So I owe a big debt of gratitude to others.
Yeah, thank you, Peter. I think you're putting the most effort into this, so we really appreciate it, and we're definitely supporters.
Great. Okay, well, listen, have a great rest of your weekend, and we'll speak soon.
Yep, definitely.
Okay, so what did you make of that? I think you can hear Gabor's frustration with the process. The market wants a Bitcoin ETF. America wants a Bitcoin ETF. The world wants a Bitcoin ETF. I think they have done everything they possibly can to address the concerns of the SEC, yet a Bitcoin ETF appears to be being treated differently than other markets. There's a whole bunch of stuff in the show notes about this. Go and check them out on my website. There's links to various articles relating to the VanEck ETF application. I've also got a link to my interview with Hester Peirce from the SEC. We discussed similar issues. If you haven't listened to that interview, it's definitely worth checking out. So I guess we'll have to ride out the year, see what Q1 has to offer. We've got BACT coming end of January. We've got the VanEck decision end of February. Could be an interesting Q1 for Bitcoin. Okay, so listen, if you want to support the show, there's a whole bunch of things you can do. And I explain this every week, and I know it must get boring for regular listeners. I'm really sorry. But this is what helps support the show. By doing this, people have become patrons. I have people get in touch who want to be an advertiser. So I'm going to do it each week, so I apologise for that. As I also mentioned in last week's show, December is going to be my first profitable month, which is pretty cool after a whole year of putting money into the podcast and losing money. It's going to be nice to lock in some profits. I do want to continue to grow revenues though, because I have a whole bunch of ideas of what I want to do with the show. I want to do some specials. I want to go out to some various locations and meet some people and do some special episodes on specific topics or location reports. And I also, at some point, I think it'd be useful to get an intern in to help me with a bunch of the admin I'm doing so I can focus on the interviews. So I'm also going to add something called income reports to my website. I saw that on a couple of other websites. It's kind of cool. It will show you the revenues coming in and how I'm spending them. So there'll be like full transparency if you care. You might not even care. But anyway, I'm going to put that up there. So listen, look, if you want to support the show, here are the things you can do. If you've never done any of these, it would really help if you just take a look. Even if you just left me a review on iTunes. Obviously, I'd love a 5-star review. So firstly, you can become a patron. Head over to patreon.com/whatbitcoindid. I'm now up to 46. I'm over $1,000, which is very, very cool. That nicely supplements the work I'm doing. So thank you to everybody who's supported me on Patreon. You can become a show sponsor. If you're interested, email me on hello@whatbitcoindid.com. Downloads have gone really well. Last month it was over 100,000 for the month. I think it was 108,000. I'm imminently going to cross 500,000 for the lifetime of the show, which is very, very cool. I'm pretty much sold out for ads for December. I've got a couple of slots, so if you're interested, get in touch. But That's nearly all gone, but I am looking for people certainly from March. I've got a couple left in Jan and Feb, but definitely from March I'm looking for new advertisers. So look, if you're interested, if you want to reach new audiences, get in touch. You can email me on hello@whatbitcoindid.com and we can organize a call to discuss. Okay, you can leave me a review on iTunes, I mentioned that, and also you can become a subscriber just by clicking on the subscribe button. Helps the show. And I've noticed I've started to go up in the listing, so that's pretty cool. So thank you to everyone who's done that. You can follow me on social media. I'm on Twitter, I'm on Medium, I'm on Instagram. My handle and everything is at whatbitcoindid. If you follow me and you reach out, I'll most likely reply to you. You can check out my website, that's www.whatbitcoindid.com. Always doing lots of work on that, working on different resources and different ways you can surf the old episodes. You can sign up to my newsletter. I send out 2 types of email. I do a daily Bitcoin newsletter where I curate all the news in Bitcoin on Twitter, Reddit, blogs, podcasts. That goes out pretty much every day, midweek. And I also then do an episode email just to let people know when new episodes are available. So you can sign up to that on my website, and you can also share out the show with your friends and family. Okay, as ever, thank you so much to everyone who supports the show. I'm loving doing this. I really appreciate all the feedback. I really appreciate the fact that people are liking what I'm doing. Going to continue working hard through to the end of the year and try and smash it in 2019 for you. I've got 2 cracking episodes next week. I've got VJ Boyapati. We do the bullish case for Bitcoin, breaking down his article that he wrote, which is epic, by the way. If you've not read it, go and check it out. And also, I'm looking at how Bitcoin and decentralized technologies can help those living under authoritarian regimes with Alex Gladstein from the Human Rights Foundation. That's an utterly fascinating interview. You don't want to miss that. So keep an eye out for them. Anyway, have a great weekend. Thank you all. Take care. See you soon. Bye.